Well, a few moments ago, we got results from Pepsi. Earnings and sales came in slightly stronger than forecast. With more, we bring in Hugh Johnston. He is Pepsi's CFO. He is joining us from Purchase, New York. Hugh, thanks so much for being with us. Glad to have you here on the Inside Track. Pepsi, the world's largest snack food maker, Asia, Latin America seem to be the growth drivers this quarter. How are you managing rising commodity costs globally?
Sure. Input costs are really increasing across the entire consumer product space. The good news from our perspective is we really do think we've got a portfolio of brands and market positions that enable us to manage our way through it successfully. If you look at our performance for the quarter, we saw 3% growth in snacks. We saw 3.5% growth in beverages, 5% pro forma revenue growth, and EPS came in right in line with our expectations. In fact, obviously relative to consensus, even a little bit stronger. So we did feel very good about the quarter. We felt it was a strong quarter.
So, Hugh, regarding the snacks, you said in the past you don't want to raise snack prices, but can you stick with that decision? How long can you hold the line if commodity prices keep going up?
Yeah, what we've said is in the first half of the year, we didn't anticipate taking a lot of snack pricing, but in the second half, we thought we would. My expectation is we'll be taking pricing in the second half of the year, really across our businesses. The way we approach this is we obviously look for productivity opportunities. We look for ways to manage our way through input costs. But I think taking pricing is certainly a part of how you have to manage input cost inflation. And our expectation is we will take some more pricing in the second half of the year.
In the beverage sector, we heard from some of your competitors earlier this week, Coke, Dr. Pepper, both indicating that they are able to pass along higher prices to consumers. Consumers are still paying, so it seems like you see the same trend as far as consumers and beverages.
Yeah, that's exactly right. Especially when you operate as a bottler, as we do in North America, one of the basic tenets of being a good bottler is you do need to be able to pass along your input cost inflation, and we think we have an ability to do that. We've probably taken a little bit less than I would have liked in the first half of the year, but I expect in the second half of the year we will take rate increases.
Hugh, looking at the bigger picture, you reiterated this year's earnings forecast. It indicates growth of 7 to 8%. So if you take out some costs, some foreign currency effects, it comes out to basically $4.46 a share. It's a little lower than Wall Street consensus. Why are you being so conservative? Do you think you're being too conservative?
No, I don't think we're being too conservative at all. Consensus eventually tends to come around to the guidance that we share. And we put the guidance of 7 to 8% out in light of input costs, in light of the consumer and the challenges that they're facing with other inflation, both in developed and in developing markets. So we think we've got the guidance about right, and we are committed to delivering against that guidance. Now, the good news is while you see obviously some challenges in developed markets, developing markets are still going quite strongly for us. If you look at the big ones, Russia and Turkey and China and India, we had double-digit growth in almost every one of those markets. So there's a lot of robustness around the world for our products.
Because some analysts are saying maybe you're being conservative in your guidance because as a company you had a pretty rough year last year with some pretty big earnings misses.
Well, I'm not sure I'd say that. At the beginning of last year, we said 11 to 13% growth, and we delivered 12. So I think we came in pretty well in line with the guidance that we had provided last year. We're saying 7 to 8% this year. And as I said, we really are committed to finding a way to deliver that. Now, in a volatile environment, obviously you evolve your plans along the way, but we really do feel very committed to delivering that guidance.
Hugh, thanks so much for the time this morning. Hugh Johnston, CFO at Pepsi, joining us there. Pepsi exceeding estimates slightly both on the top and the bottom line this quarter.